Hello students, today I am going to explain you role of accounting and basic terms of accounting. Role of accounting. Accounting is a system for measuring and summarizing business activities, interpreting financial information and communicating the results to management and other shareholders to help them make better business decisions. In fact, accounting is the language of the business. Why I am saying this? Because it provides so many information to the owners, managers and investors for evaluating company's financial performance. These people are known as the shareholders of the business. In fact, the purpose of the accounting is to help the shareholder for making better decisions by providing financial information. Accounting information relates to the past transaction and it is in quantitative and financial in nature. It does not provide qualitative and non-financial position. So every business holder must keep in mind these limitations while making the use of accounting information. Now, basic terms of accounting. Entity, transaction, assets, liabilities, capital, sales, revenues, expenses, expenditure, profit, gain, loss, discount, voucher, goods, drawing, purchase, stock, debtors and creditors. Now I am going to explain you each and every term in very descriptive way. The first one is entity. Entity means definite individual existence of the business. Now next one is transaction. Transaction involves values between two or more entities and it can be either in cash form or credit form. Assets. Assets are the items of value used by the business which is always expressed in monetary term. Now liability. Liability are the debts that an enterprise has to pay some amount in future. Now capital. Capital money invested by the owner in the firm is known as the capital. Now sales. Sales are total revenue from goods and services sold to customer. It may be either in the form of cash sales or in credit sales. Now revenue. Revenues are the amount of business earned by selling goods or services. Now expenses. Expenses are the cost incurred by a business. Now expenditure. Spending money for some benefit is called the expenditure. Now profit. Excess of revenues over expenses of the business is known as the profit. Now gain. A profit arises from transaction is called the gain. Now loss. Excess of expenses over the revenue of the business is known as the loss. Now discount. It is the deduction in the price of goods sold is called the discount. Now voucher. Evidence is very important for every businessman and this is the documentary evidence in support of transaction is known as the voucher. Now goods. On their basis, the business unit is dealing. Basically, it is a product. Now drawing. Means when owner is drawing money or good for personal use is known as the drawing. Now purchase. Amount of goods purchased by owner on credit basis or on cash basis. Now stock. Stock, it is a measure of something in business. Now debtors. Debtors are the person who owe an enterprise. Now creditors. Creditors are the person who have to be paid by an enterprise. Now these are the basic terms of accounting. I hope that you must understood what the basic terms of accounting and what are the role of accounting. Goodbye.